Exceptional realization and abnormal profits from the Indian division, highlights of the first 9 months operations of Hindalco for FY 21-22. For the last 365 days, aluminium companies have performed exceptionally well as compared to the other metal peers, Hindalco and National Aluminium, with a return of 73% and 113% respectively, closer to their 52-week highs with a Fibonacci retracement level well above 90%. Hindalco has been leading both aluminium MCX and Nifty metals for the last 6 months. It is quite evident in its size of candles and the momentum of its prices. As regards aluminium at the global level, there has been an upward movement continuously for the last 12 months caused by supply disruptions resulting in gap between production and demand, which has pushed up the prices. The global share chart is replicated by the Indian scrips Hindalco as well as National Aluminium, a mirror image of the global aluminium. A look at the chart of Hindalco for the last 12 months. It has always remained about 200 EMA and the trajectory has been quite upward, ascending channel, not finding a reason to come down. As regards Hindalco, in terms of revenue, world's largest footprint across the globe, end-to-end value chain, starting from bauxite mining, aluminium smelting to the last foil making, very comprehensive operations, and that is the reason it has got a strong foothold in the industry. Shareholding pattern of the company is quite strong. Promoters hold around 35%. They have got a strong support from mutual funds with 12% and FPIs 26%, growing from quarter to quarter. That way, the group derives strength from the increasing shareholding of FPI, which speaks of their confidence in the company's fortunes. Hindalco has got a global presence through its strong 100% subsidiary, Novelis Inc., which is into flat-rolled aluminium products, mainly beverage can stock. It has got operations across the globe from US to Asian subcontinent. Quarterly revenue and EBITDA, it has been quite upward movement for the last 7 quarters, highest being the latest quarter with 50,000 plus crores revenue. EBITDA percentage reached a low of 7.1% in June 2020 but peaked in September 21 at 15.8, although there is a small fall in the subsequent quarter. Continued performance record of sorts. Something regarding its performance in terms of EBITDA percentage achieved. Revenue for 12 months up to December 19, December 20, December 21. A comparison throws up very good conclusions. 120,000 crores to 179,000 crores, a growth of 48% between 12 months. But the growth in EBITDA is astounding at 86% as against the revenue growth of 48%. This is very much reflected in the EBITDA moving by almost 3% from 11.6 of previous December to 14.6. This abnormal growth in EBITDA is quite disproportionate to the revenue, which has grown up because of the higher realization per ton. If we take revenue and EBITDA to understand the real growth in the EBITDA, Novelis EBITDA has in fact percentage wise fallen, whereas India operations, there has been almost 50% improvement in the EBITDA percentage from 23.5% to 38%. Copper is not of greater consequence. In fact, EBITDA was contributed almost 67% by Novelis, 27% by India operations, but in the changed situation, it is India operations which is reporting almost 40% of the EBITDA, 60% going to copper as well as Novelis, and EBITDA percentage of India which is almost 23% previous year has moved 15% to 38.1%. Quite unbelievable. It is mainly because of the aluminium strong market revival and considerable cost implications in favor of the company. In the meanwhile, Novelis has also reported strong performance figures. I am Vittal Prabhu, bringing you the weekly video on Stock Learning Simplified. Hope you will find the video interesting and useful. Its cash flow sizable, normal, no special features except for extra working capital movement during the last 9 months. And when it comes to dividend, for a company of this size, the amount appears to be minuscule. Company generates net surplus, but its very aspirational investment in fixed assets and acquisition of companies on a regular basis is the very strong feature of Hindalco, and on the whole, cash flow has got two main characteristics: a very weak dividend and a very strong investment in fixed assets and corporate acquisitions for inorganic growth. Hindalco's dividend track record is not impressive enough. Very minuscule dividend of rupee 1 plus, the latest being rupees 3. And the dividend yield is well below 1%, and the payout a small portion of the profits earned by the company. Of course, dividend yield is not the consideration for investing in Hindalco. The reasons which attract investment are its global role as one of the major players in aluminium industry in terms of revenue and quantum. The finance cost incurred by the company appears to be quite a burden, as out of the total EBITDA earned, the percentage which goes to service finance cost is almost 30% under normal years. Current year it has come down to 15% because of the bloated EBITDA, but 30% of earnings going to service borrowings is a big drain on the company. PE multiple of Hindalco is quite distorted, and it is impacted to a large extent by the widely fluctuating profits of the company, moving from 6,000 crores to almost 12,000 crores in the latest 12 months. While the PE multiple appears to be on the lower side, it might not be the real representative of the merit of Hindalco for investment. If you look at the price action data, it's quite interesting. Trading quantity has been going up, so also the price quantity supporting the price movement upwards, both moving in the same direction. If you take the order size, the size has been falling, suggesting large number of small players not having any major consequence, but the delivery percentage has remained above normal, which is a positive for the price moving up. Strong positives in respect of Hindalco are the growing market, preference of the global customers towards lightweight materials, Indian government's focus on infrastructure development, creating additional demand for aluminum and copper. On the other side, price competitiveness from China, role of Russia, and the excessive prices realized by the company during the last 12 months is not likely to repeat in future, as normalcy will return, and any long-term investment has to keep in mind the expected normal prices in future rather than the windfall that was experienced during the previous 12 months. Hope you found the video on Hindalco, the global giant, interesting. You can access similar videos at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon. for timely intimation on our forthcoming videos. Thank you so much for your valuable time, support and interest. This video is for purpose of information, education and awareness only. This is not to be a solicitation or recommendation to buy, sell or hold securities. Please seek the advice of a competent professional before taking action of any kind.